Good morning and welcome to the Killik & Co market update. This week the S&P 500 in the US returned to where it was 12 months ago, and this really highlights the difference in performance and, more importantly, recovery that we've seen between the S&P 500 and the FTSE 100. Here's a chart that shows the percentage changes in both indexes over the last 12 months. As you can see, the S&P 500 in the green did participate in the market fall in March, but it has since recovered to where it was 12 months ago. The FTSE 100, on the other hand, is still about 20% below where it was 12 months ago. And here at Killik, we really have seen a big underperformance in accounts that focus very heavily on UK stocks. So what's the reason for the difference? It's all down to the types of companies that are within these two indexes. The FTSE 100 is very heavily focused on more traditional businesses, including businesses that pay very high dividends and have had to cut those dividends because of the coronavirus. The S&P 500, on the other hand, is much more exposed to big technology businesses that are not only surviving the lockdown, but also managing to benefit from it. Let's have a look at a few examples. In the FTSE 100, some of the biggest constituents are HSBC, BP and Shell. BP and Shell are really suffering because the oil price has come down so much, and this week Shell has cut its dividend for the first time since the Second World War. HSBC is a very Asia-focused bank and it's had a very tough couple of years, starting with the US-China trade war, then the protests in Hong Kong, and now the coronavirus. And in fact, recently the UK regulator has forced all UK banks to cancel their dividends for this year, so very bad news for all of these three companies which are within the FTSE 100. Within the S&P 500, on the other hand, we've got some great technology businesses. Amazon, Microsoft and Alphabet, which is the parent company of Google. This lockdown situation has forced millions of people to try online payments and online deliveries for the first time, and it's likely that many of these people will never look back, and that creates a huge opportunity for Amazon, and perhaps that's a reason why the Amazon share price is significantly above where it was before the coronavirus started. Microsoft had great results this week, and they announced a big increase in demand for the type of software that helps people to work more flexibly. As with Amazon and all these increases in online deliveries, millions of people have been forced to try flexible working for the first time, and again it's likely that many of these people will never look back. So it's likely we'll see an ongoing increase in demand for flexible working software even after the lockdown ends. Alphabet, or Google, also had results this week, and while they experienced a decrease in advertising revenues, they did experience a big increase in revenue from Google Cloud, showing that they too are a beneficiary from flexible working. We've already mentioned Shell's dividend cut, but it's big news, so let's take a look in a bit more detail. This week, Shell announced it would be cutting its dividend by about 2/3, and this news really did come as a surprise to investors. Firstly, because Shell has always been very proud of its dividend, and secondly, because the company had already taken steps to preserve cash for this year, for example by cancelling some planned investments. However, a dividend is a distribution of profits, and these oil companies are far less profitable with oil at such low levels, and it seems that Shell has taken the prudent decision to preserve more cash at this time of great uncertainty, and this move by Shell will save it $10 billion this year. Shell recently became the largest oil company to commit to becoming carbon neutral by the year 2050, and this will require a lot of investment and a lot of cash. However, income investors will be very disappointed by Shell's decision. Previously, BP and Shell made up about 1/5 of dividends paid out by FTSE 100 companies, and this decision by Shell will leave a very big hole. And finally this week, the latest GDP numbers from the US showed that their economy shrank by 4.8% in the first quarter of 2020, which was worse than economists had been expecting. We'll be keeping a very close eye on GDP numbers because arguably they're the best indicator of the impact of the coronavirus on the real economy. Moving ahead to look at next week, lots of companies with results due out, and we're looking forward to results from Walt Disney, from PayPal, and from gaming company Electronic Arts. That's it from us. Have a great weekend, and we'll see you next Friday.